Fifth, the bond market took its cue from that robust PMI number, which sent bond yields higher, stock prices lower. Of course, every time you get higher longer-term interest rates, the bank stocks tend to rally. But that rarely happens on days when oil goes up. Today was strong, was exceptional, was positive. Sixth, the reopening trade is still back on. The airlines are running, aided by the fact that they're forcing their employees to get vaccinated. Anything that makes people feel more secure traveling is great news. JetBlue just told us they expect transatlantic flights to resume by Thanksgiving. Now, that's some consumer spending is apparently flagging, some people say today. It's a much-needed development for the largest department stores that transatlantic flights come back. By the way, it's also good for terrible trust name Estee Lauder, come to think of it, EL. Okay, now, this is the one that I think is really tricky because I don't like these stocks, but I have to talk about them. Yeah, China rallied. Now, this is one of the most important factors that happened today. The Chinese stock market is the worst in the world. It hasn't been able to get any traction whatsoever because the Chinese Communist Party has started governing like they actually believe in communism. At the same time, there's a real estate crisis. But today we saw big gains in Alibaba, JD.com, Baidu, and a host of other Chinese names. Does that mean the government's war against capitalism has subsided for now? Could be. Certainly giving breathing room to the American companies with lots of businesses over there. And there I'm speaking about Nike and longtime Cramer fave Apple. You know what? I would actually nibble at Starbucks off this move, too. Of course, I hesitate to recommend any Chinese stocks on the show, even as they seem ripe for further bounce, because I don't want to wake up to the headline that the PRC is targeting yet another industry. One big caveat, though. This is strictly a snapback rally. It's hard for these moves to last because there's still so many investors who want to get out. If you get anywhere higher, they're going to hit the X's en masse, although as we get closer to the end of the month, I told you I will get more and more positive. Here's the bottom line. This was a decent bounce. You had a chance to get in ahead of it earlier in the day, but now that we've rebounded, I think you got to wait. No need to come in on top of what might turn out to be quicksand. Just keep your bat on your shoulder and wait for the next opportunity to buy some high-quality stocks at better prices than you ever thought you could get.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.